Okay. Good afternoon, everyone. I know this is an engagement that we are going to have a discussion about CTA 10, that is international taxation. But in the meantime, we can wait for a few minutes for allow other participants to join the platform, because I can only see a few people here. About 5 minutes. Then from there we can start. Thank you so much.
Good afternoon. Justice or Charles, please confirm if you can hear me.
Hello, Andrew.
Yes, good afternoon, Justice.
Good afternoon, Andrew. Welcome. Godfrey is just in here. He's coming to us to start.
All right.
Welcome.
Thank you.
Good afternoon, everyone. Hopefully, CPR can able to hear me, and to confirm if you can hear me.
Yes, I can hear you, Godfrey.
Okay.
Nice to...
Thank you. Once again, I welcome you to this engagement. My name is Godfrey Seziwa, Examinations Officer. I'll be the panelist for this session. And with me is CPA Andrew Ahabwe, who is going to be our presenter this afternoon. CPA Andrew Ahabwe is a member of the Institute of Certified Public Accountants of Uganda. He is currently serving as a tax and risk manager in Stanbic Bank Uganda Limited, and also offers support functions in other Stanbic Bank subsidiaries, that is in Uganda. Andrew previously worked with the URA, that is Uganda Revenue Authority, in the Domestic Taxes Department. And he's also serving in the process, was also serving in the Process Management Division and Telecommunications. Andrew Ahabwe has got vast experience in international taxation, and he was also working as used to work with URA in the International Tax Unit in the Large Taxpayers Office. He's also a lecturer of oil and gas taxation and accounting at East African School of Taxation and the tax law and practice for postgraduate diploma also in the tax administration with URA. And also, as I said, is a member of the Institute of Certified Public Accountants of Uganda and who holds a Master's of Science in Oil and Gas Accounting from Robert Gordon University, that is in Aberdeen. Also holds an advanced diploma in international taxation from the Chartered Institute of Taxation of the UK, and also a Bachelor of Commerce degree. So allow me, members, at this moment to welcome Andrew Ahabwe to take us through this important discussion. Andrew, you are most welcome.
Thank you, Godfrey, for that brief introduction. Thanks for giving me the opportunity to come and share in today's student virtual engagement webinar on CTA 10 international taxation. Godfrey, before you go, just kindly confirm that you can hear me loud and clearly.
Yes, I can hear you, Andrew.
All right. Okay. Thank you. Okay, so I will share my screen. We had put up a presentation which will guide us in today's conversation. Let me share that shortly. Please confirm if you can see the screen.
Yes, we can.
All right. Okay, so as part of today's conversation, I don't think I need to introduce myself again. Andrew Ahabwe is my name, as Godfrey had stated. Just maybe a few pointers. I used to lecture oil and gas taxation, but I since stopped. It's been a while, about 2 years now. And the training as well with URA ceased after I left. However, I've still remained in touch with this academic content. And once in a while, I support some colleagues who do an advanced diploma in international taxation. So I do support here and there. Our discussion today is going to focus on international taxation, CTA 10. And basically our scope of engagement is to address two main questions. And in those questions, we shall have a variety of aspects to address. So from the first one, from a CPA perspective, what is expected of students when they are sitting and preparing for this CTA paper 10 on international taxation? In there, we shall talk about briefly the learning outcomes. So for example, when you look at the syllabus and you look at the breakdown, there are certain learning outcomes that are expected of you as a student, as a person who is preparing for this particular exam. We shall look at those briefly and how they are categorized from an abilities perspective. We shall also look at the content of the syllabus, and here we're looking at the new syllabus. We shall look at the different items that are covered in there. From assumed knowledge, there is also an expectation that ideally you have gone through CTA 8, and that's one of the key items because it builds, given the fact that this is a paper on income tax majorly, there's an expectation that you have done your CTA 8 or you are doing it and you have the understanding of that information. Because international taxation is a build-up on income tax. And some of the items help you prepare even better for this exam. And then the other question is on the student specifically. How can you prepare better? How can you study better? When you look at the examinations and the responses, are there aspects that can be noted? And are there certain pitfalls that you need to avoid? So that is the basic diet that we have today. We have about 2 hours. We've gone through about 13 or 15 of them. So I will endeavor to go through this material or what has been prepared in maybe 1 hour or slightly more, to give you some time at the end of the session to ask. And Godfrey, you let me know if we can take some questions, and if anyone has some questions that need to be addressed straight away, we can take them on as we go through them, the prepared material. So without further discussion, I'll go straight to the prepared material. So I wanted us to start from the perspective of learning outcomes. And when you look at the learning outcomes, there's a certain criteria that's been provided. And my intention is not to go through each one by one, but my intention is to give you an eye-opener on the level of preparation that is required of you, and what exactly forms the basics of your learning outcomes. So when you look at your prepared syllabus, you see there are about 7 items that are picked up on as learning outcomes. And alongside those 7 items, and when you look at the guidelines, it gives you, in brackets, you'll either see an AN, an E, an S, an A, depending on the ability that is expected of you. So when we look at the different categories, you'll see that a great deal of the content that you're looking at from an international taxation perspective involves more than just regurgitating the information that you have studied and learned. A lot of the requirements, the abilities that are expected from you involve a level of analysis. So when you look at the descriptor on analysis, there is an expectation that you should be able to examine and break down information in 2 parts by identifying motives or causes. Now, this is a generic description, but it can give you a sense of direction on the level of preparation. So when you look at, for example, the learning outcomes, you see number 1 talks about the requirement for you to be able to analyze the resident status of taxpayers. Now, for a person who has done taxation and gone through even up to CTA 8, whether you've done CPA or not, if you have done CTA 8, you know that residency is part of the information that you look at that level. But when we come to this perspective on an international tax perspective, we expect that the candidates should be prepared to apply themselves on, first of all, the different rules that are there. So to examine what the rules are, be able to relate these to the specific persons that you're dealing with. We'll see, as when you look at the content, there's also an expectation that you can bring in the element of dual residence. So when you look at a dual resident, it means that a person might qualify for residence in more than one country. So when you talk about analysis, there's an expectation that you can analyze, for example, on dual residence, know the implication, know how dual residence arises, be able to relate the impact and the cause for such. So the descriptor that you see under ability pushes you to know how much preparation you need to put in and to what level of preparation you need to have. So if you go to this exam and all you know is the information in the act, but you can't relate it to a scenario, analysis becomes difficult. When we look at item number 2, a learning outcome that requires you to be able to advise clients on the tax implications of various transactions. This is quite broad, and it's probably more clear when you look at the syllabus, but there are various transactions that can have a cross-border implication. We shall look at this when we look at the basics, just touch about it when you're looking at the syllabus. Those various cross-border transactions have tax implications. So when you look at the ability that's expected of you, there's an expectation that you should be able to evaluate. So judge the value, judge the case study, judge the question, judge the scenario at hand, and be able to give your views on what the question is. Now, that expectation or the ability will cut across also the discussion on the expectation or learning outcome on source rules and tax implications. It will also cut across the evaluation of transfer pricing. Now, when we go to double taxation policy as a learning outcome, issues, the requirement is even higher because you're now at a synthesis perspective. You're expected to be able to compile information together in a different way by combining different elements in a pattern of proposing alternative solutions. Now, generally, when you look at it here, it might not relate to what you're studying, but when we look at the syllabus, you see that there are many questions when it comes to double taxation and the policies that are coming out, especially when we look at public international law and the guidance that's coming in from the OECD, the guidance that's coming in from the UN. You see there are many proposals that are coming up. If we bring this home to a Ugandan environment, not every policy would be best suited for a developing nation like ours. Can you be able to identify that? Can you be able to identify weaknesses and maybe areas that could work for a Ugandan environment? So the level that is required of you at a synthesis perspective is even higher because it's building on the fact that you are now a certified tax advisor, or you are going to be. And as such, you have the technical competence to be able to evaluate proposals because you might not only work for clients, you may work for government. And if you're working for government, there's an expectation that you must be able to advise appropriately. So your synthesis is important. When we go down to application of case law, right now, again, we shall look at it when we look at the element of private and public international law. A great deal of what governments are able to manage from a jurisdiction perspective speaks to three items of jurisdiction. So there are three. The first one is legislative, the ability to set your own laws. The second one is adjudicative, the ability to decide cases. And the third one is enforcement. So there are three types of jurisdiction that a country can apply. Now, case law is an outcome of adjudicative jurisdiction. You can sit down and decide how a specific case will be treated in as far as interpretation of tax law is concerned. Now, this case law gives us guidance as to how you can apply similar laws for future similar transactions. So when we are looking at this particular CTA 10, case law gives us quite a bit of private international law, and it's very useful in providing guidance, especially from a country's perspective. Lastly, from an outcomes perspective, is one on international compliance issues. Now, there are quite a number of, especially in the environment that we're in, we are seeing a lot of cross-border compliance issues that are coming through. And for example, you'll see that last year in July, Uganda, we introduced a new law, which relates to what they call the Common Reporting Standard. Now, this Common Reporting Standard requires that financial information, which would include, for example, bank accounts and account balances and different incomes that have been earned by non-residents who are currently in Uganda, that information is shared with the tax administration. And that information is then relayed to countries that have signed on to the Convention on the Mutual Administrative Assistance. Now, you'll find that there are a number of compliance requirements that are coming in, both driven globally, both local and global from a drive perspective. Now, again, when it comes to the ability here, you need to, first of all, it means that you need to first know, by the time you get to evaluation, you need to have knowledge of these items. You need to know what they are, such that you can then have the ability to then judge the value of that information. What does it mean? What does it require? Does it impose a bigger burden? Is it something that's easy to comply with? So you then have the ability to apply yourself as far as the content is concerned. I will just pause here. Let me check the Q&A. I see some, okay, very good. I see Dennis saying he can hear me. Thank you. Let me know if that should change at any point in time. So for my learning outcomes, that is what I believe I can share. From this, we can then go to a discussion on the syllabus, because based off the syllabus, you can then know what and how you need to prepare better. So when we look at CTA 10, and you look at the syllabus, it starts from a discussion on residence. And similarly to how you had seen the learning outcomes, there are different perspectives that are addressed when you're looking at the element of residence. But before we can go to residence, there are some concepts, basic principles of international taxation that you must and you should have on your fingertips, because these give you a background on where you need to start from, especially when it comes to an element of international taxation. The first one is one that I've talked about, and you will hear quite often when they talk about the element of a jurisdiction. A jurisdiction means the competence of a state to consider legal issues within its legal system. Now, I'm not here to give a full lecture, but the element on jurisdiction feeds different aspects in the course content of a CTA 10. Why? Because CTA 10 looks at the jurisdiction of Uganda, first of all, and that means we have, as a country, we have our own ability, our own competence to be able to prescribe laws, to have courts resolve disputes, to be able to enforce those rules. So for example, when you have the police, you have URA, these are bodies that can be used in essence to enforce these particular laws. So that speaks to the element of jurisdiction. Now, when we look at international law, ideally we don't have a specific body of knowledge where you can check an act which says this is the international tax law, for example. What we have, and it's either often called international tax law, it could be international law, but international law can cover a breadth of different aspects or topics. So when we look at it, we'll have what you have as your public international law and what you also have as your private international law. And by public, I'm referring to generally accepted legal principles, and in some cases, what ends up being customary law. And these principles have been agreed to in possibly different conventions. So for example, what would I refer to? If you look at the element of treaties, when many countries are signing on to treaties, they make reference to two main models of treaties. So you have your OECD and you have your UN. Those two MTCs form a basis of generally accepted legal principles when drafting a treaty between two or more countries. You'll have other country models such as your US model. You have multilateral models such as the Nordic multilateral tax convention, double taxation convention. which is used when drafting treaties. You have other fodder for public or legally accepted, generally accepted legal concepts, such as your OECD transfer pricing guidelines. You have your UN, there's quite a lot of guidance that's come out. You have the Vienna Convention on the Law of Treaties. So there's quite a body of knowledge out there which speaks to legally accepted principles, but in the public domain. You will not find them in your domestic law. On the other hand, we have what they call private international law. And private international law it's a branch of law dealing with the state's recognition of the existence of overseas laws on a technical level. And basically, we are looking at that point at how domestic courts in Uganda, for example, interpret legislation in as far as cross-border transactions are concerned from a context of domestic cases or scenarios. So what am I referring to here? So in this particular scenario, if we look at private international law, you would be referring to, if you look at our act, for example, there are parts of that act that recognize that you're going to have cross-border transactions, and those cross-border transactions are going to have an implication from a domestic perspective, but there is also an expectation from a public international perspective that those transactions will also have a counter implication on the other side of the border. So you'll find, say, for example, in our act, you'll have sections from 78, which talks about your branches, to 79, which talks about source rules, to 80, 83, which talks about 80, which goes into your relief mechanisms, which is your unilateral relief. You'll have all that until the oil and gas taxation sessions, which is part 9A of the Act. And all that is talking about cross-border transactions and sections that would impact on such transactions. So still within that, you'd have your 88, which is looking at international agreements. If you look at that bit of the act, and then you then marry that with the withholding tax provisions that kick in thereafter, you will see that there is a lot of private, there is law in our domestic act, which handles cross-border transactions. And that is a bit of what they call private international law. Now, each country has a way in which it has chosen to look at such cross-border transactions. So if you go to Kenya, for example, you would expect to have provisions that speak to those kind of transactions. They might not necessarily be similar in application, but they address the same transactions. If you go to Tanzania, same thing. Now, I'm sure you're listening to me saying, am I expected to know the treatments across the border? The answer is not necessarily a yes or no, but rather in knowing the different treatments in those countries, it helps you understand how there's a potential for interaction. Whether that will be evaluated in this course, unlikely, but it's expected that you have an understanding, especially when we look at, for example, the next aspect on residence. Each country has different ways in which it connects to its either citizens or income. And in fact, it's a very good connection for my discussion. The element between a jurisdiction and the income it taxes or the persons that are taxed is what they call the connecting factors. Now, our connecting factors in Uganda are majorly two. We have the connection based of residence and the connection based of source. When we look at the element of residence, it depends on who you are as a person. So in there, you'll have items to do with the general rules of residence. Now, you also then need to look at who is the person we are looking at. If you're looking at an individual, we have different rules that determine the residence of an individual. If you're preparing for this CTA 10, do you know these rules? Can you apply them? Can you, if faced with a scenario, be able to evaluate, analyze, and tell that this person is either qualifying for residence or not? Is there missing information? Is there information that you would require to be able to fully give an explanation or confirmation of whether a person is resident or not? There is that level of preparation and the ability that is expected of you, given the fact that you are a certified tax advisor. If you are an individual and you're resident, what does that mean for the non-residents? What are the implications that kick in for non-residents? If you look at, for example, a partnership, what qualifies for a resident partnership and a non-resident partnership? Can you evaluate those key requirements that make a partnership resident or not? When you look at, for example, a retirement fund or a fund itself, are there rules that determine residence or not? If you look at, for example, companies, do you know the rules that determine the residence of a company or not? So those are some of the items you should have at your fingertips. But if we went back to the expectation and you look at number one on analysis of residence status, it is not enough for you to simply know the rules, but you are required to be able to analyze and give a more detailed explanation and relate that information to the case study at hand. When we move down and we look at the next aspect under residence, residence presents under connecting factors. It presents a conflict. And conflicts are usually conflicts in the sphere of international taxation usually create double taxation. We have three types of conflicts, three main causes of conflicts. The first one is where you have a residence conflict. What does this mean? Where you have an individual that is qualifying for residence in two separate jurisdictions. What does that mean? It means that in one country, they apply a set of rules, could be subjective, could be numerical, in determining whether a person has qualified for residence. And in the other states, they apply different rules. So you find a scenario where a person is becoming dual resident. How do you address that? That requirement then brings in the element of a double taxation agreement. And for that, you then are required to be aware of Article 4 of most double taxation agreements, which speak to the element of residence. And when you look at the double taxation agreements, in this particular set of information in your syllabus, you can opt to have, if you found such a question in the exam, you can relate to the public international law, what's available. So either your OECD double taxation agreement, your UN model double taxation agreement, or you can actually relate to the existing double taxation agreements that Uganda has signed with other countries. Do you know those agreements? Are you aware of the content that is in Article 4? Are you aware of the requirements of the different paragraphs in Article 4? When you look at it and you look at the element, first of all, at the definition of who a resident is, that would be addressed in your first paragraph of Article 4. If you look at the element of tiebreakers, and when you look at tiebreakers are a set of criteria or tests that help to determine where a person is resident in a scenario of dual resident. So there are a couple of steps, starting from the element of permanent home, to the element of habitual abode, to the element of habitual abode can be also a set of vital interests, to the element of nationality. There could be a step I think I've missed in there, but if that fails, you then have the element of a mutual administration, a MAP, mutual, sorry, skips my mind, administrative procedure, a MAP. Now, in the MAP, you can then engage between two separate tax authorities to enable them discuss and agree based off the circumstances at hand, where does this particular taxpayer fall. Now, of recent, there is something I think that is worth noting. If you look at the recent guidance that has come through from the OECD and currently the UN, there is a key requirement to note that a determination of residence under Article 4, where you have dual residence, does not stop a country that has determined a person as resident from taxing that person in other areas not part of the convention. So what am I saying? If you look at, for example, under recent changes from 2017 to date, in the area of public international law, a couple of these articles have changed. They are not the way they are or the way they were. So if you're preparing for this particular paper, it's important that you prepare in full knowledge of the current material. And as part of those changes, you will note that that next line talks about the mutual agreement procedure. I called it mutual administrative procedure, forgive me. But that mutual agreement procedure is a recent change effective 2017 in the tiebreakers for both individuals and the non-individuals. So that particular one requires that when you're in a tiebreaker and you fail to agree, for individuals, you close on a mutual agreement procedure. For companies, there's been a change away from a place of effective management to now a mutual agreement procedure. So back to how we prepare. Are you aware of these changes? Are you aware of what was there before? Are you aware of what is driving the change from what was there pre-2017 to what is now current 2017? Do you know why these changes have happened? I'll just pause for you to reflect. Because if you don't know, then it means if, let's say, you're working for Ministry of Finance and you're in the policy department and you're agreeing a treaty, it means that you're not aware of the current body of information that's there. It means that you're not going to provide the right guidance to the people that require it. So there is an expectation as a certified tax advisor that this information should be available to you and you should be prepared to share. When we move to the next slide and we look at the element of sources, income sources and their taxation, source, as discussed earlier, is another connecting factor. That ideally, if I can tax you as a resident, but if you're a non-resident earning income from my jurisdiction, which is Uganda, then there is an expectation that you are required to pay tax of the income sourced in the country. So our sourcing rules will speak to, which is normally Section 79 of the Income Tax Act. It will address the different rules that determine whether an income is sourced in country. You will note that a big number of your questions that you've seen in the past do pick up on that element of source rules. Why? Because of the underlying connecting factors that we shall tax you as a resident on worldwide income, but if you're a non-resident as per Section 17 of the Income Tax Act, 17.2, if you're non-resident, then you will be taxed on only income sourced in the country. So it is important for non-residents who are earning the income from Uganda to confirm whether the income they are earning is actually considered sourced in country or not. So there are different sourcing rules that that apply to different incomes. And it's important that you are aware of those sourcing rules. So for example, there is a sourcing rule on business income. There is a sourcing rule on income which is earned through a branch in Uganda. There is a sourcing rule on persons who are carrying on business through a charter of a vehicle, a ship, aircraft, such items. There are sourcing rules on employment income and provision of services. These have changed, especially 2015. If you look at the recent cases that have come out, there was a case recently on logistics where you move cargo from Uganda abroad. What is the tax treatment? There was a case there on cargo that was embarking outside Uganda coming in, and how URA had expected that withholding tax is applied. Can you relate some of our rules to the controversial scenarios that are out there? Can you address why they are controversial? Yes. There are sourcing rules on immovable property, on change of ownership, on movable property, on disposal of depreciable assets, on intellectual property, on pensions or annuities, on interests, on dividends, on natural resource payments, on contributions to a retirement fund, on management charges. So there is quite a lot when you look at it from an income perspective. Now, if we were to go back to our learning outcomes, you'll note that there are a couple of learning outcomes that speak to transactions. Yes. So if you look at, for example, item number 2, and you look at item number 6, these relate to transactions. So a number of the transactions that you analyze pick up on these elements of sourcing rules. They pick up on tax treatment. Do you understand those rules? If you bring in an element of a transaction where you have a double taxation agreement, it then brings you to another level, which we shall see when you look at the treaties from a syllabus perspective. But you are expected to know this. This speaks to item number 3, 4. When we look at 5 now, and you look at the element of payments to non-resident public entertainers and sports persons, this is a continuation in the discussion under the Income Tax Act. And here we are looking specifically at Section 84. Yeah. So like I said, you definitely need to have a very good understanding from Section 78 up until Section 89. All right. And then we've talked about shipping and air transport. I've also talked about that's important to understand the international agreements and how these apply to these specific transactions. So first of all, when you look at cross-border transactions, there's scenario 1 that this transaction could occur, say, for example, between Uganda and DRC. At the moment, we do not have an agreement, a DTA, between Uganda and DRC. Are there unilateral provisions, for example, that would help in such a transaction? Are you aware of those? If we had a DTA, what would be the implications? Similarly, you will also note that for a number of the incomes that are source-based and relating to non-residents, many of them are subject to WHT provisions. It's important as well, as given the fact that it's part of the syllabus, but given the fact that it normally relates to most transactions, it's important to know the WHT provisions that apply to the specific transactions. If you have any question, I believe you can throw it in the Q&A, please, such that by the time we get to the end, you haven't forgotten it, and then we can address them as we get to that, the end. Okay, so under source, those are different items that you need to note. The next item under syllabus that's also important, when you look at, for example, taxation of branches, subsidiaries, and parents, there are a number of issues under that particular heading that you need to have in the back of your mind. Definitely, as these entities transact, say for example, branch and headquarter, there's an implication on the taxation. And there are recent cases that have come out to stipulate how these particular transactions should be treated. Say, for example, where you have a branch receiving services from the headquarter. If the branch has borrowed from the headquarter, how should that be treated? Can you apply VAT to some of those transactions? Are they tax deductible? Are there anything, is there an element of transfer pricing that comes in if they are deductible? What are the rules that would apply? How would you separate if, for example, the branch has activity in Uganda and that activity has resulted in income, business income, but at the same time, the headquarter has income it has also earned. How would those incomes be treated? Are they relatable? Can they be looked at as one, or are they separate? There is income that is subject to withholding tax as final tax. But if you're operating as a branch, that income is subject to 30% tax, depending on whether you qualify for branch taxation. Do you know the rules that result in a branch being created? So for example, when you look at section 78 and you look at the definition of a branch, it brings out 4 potential perspectives of how a branch can be created. There is an agency branch, which is your 78A1. You have a substantial equipment or substantial machinery branch, which is your I2. You have a construction or assembly or installation branch, which is I3. And then 4, you have your services branch. Now, in a lot of our nomenclature, a branch is often substituted with a PE. But I've actually seen in the proposals that government have been put out, actually, there's a move to remove the word branch and run with the word permanent establishment. Yeah. So you need to be aware of these perspectives, what creates a branch and the implication thereof. You also then have issues to do with repatriated income, section 82. You have taxation at source. We've mentioned that, especially when it comes into branch taxation. If you look at the interplay between section 85 and 83, and you look at how that kicks in from an element of branch taxation, I think that's also something you need to note. The treatment of corporate losses and corporate reorganizations. When you look at section 77, what does that imply for a company? What would that mean for a reorganization of a group? And are you ready? Can you ably explain these areas and relate them to a scenario? There are also definitely areas of international tax planning that kick in and potential anti-avoidance procedures that URA may apply if they don't agree with the way you have structured your transaction. Another area that is important for your preparation is the one on transfer pricing. Now, this is quite broad and has quite a bit of detail, so the level of preparation has to be very robust. When we look at the fundamental sources, the main source for this on TP, you have your OECD transfer pricing guidelines. We had the BEPS agenda give us some action points effective 2017. We saw some changes that came through the MTC, the ones that I was talking about, for example, mutual administrative mutual agreement procedure in Article 4. For example, changes in the transfer pricing rules and a focus on value addition and value creation that have come through actions 8 to 10. Now, these action points give a lot of public international law in terms of guidance on how countries should look at things to minimize losses that they can face when it comes to tax pilferage. Yeah. So BEPS in its own right has 15 action points. These action points speak to different areas. But when we're looking at transfer pricing, you have actions 8 to 10 on value creation. You have 13, which talk about documentation. And then you have 15, which is your multilateral instrument, which brings in the element of how some of these changes can be embedded within the tax treaties. And that's specifically for transfer pricing. But when it comes to a preparation for CTA 10, it is important that you are aware of the different action points, 1 to 15. What's in the action points? What is relevant from a country perspective? If we had, for example, to design building blocks in the element of, say, controlled foreign corporation rules, CFC rules, what would be expected? So it's important that you know what is in those action points. Sticking to transfer pricing, it is important to know what the arm's length principle is. In there means that you should be aware of the transfer pricing regulations that we have as Uganda and the documentation requirements that were provided. So you need to be aware what's in there and what's the content. Can you explain it? Can you relate it? When it comes to a functional analysis, do you know what a functional analysis is? When I talk about a functional analysis, I talk about three in perspective. They talk about your functions, your assets, and risks. And in those three, they're looking at how they are distributed from a transaction perspective and to a value chain perspective. So if you have a transaction which is cross-border, and there are multiple players in that value chain, do you understand what each player is providing from a functions perspective, from an assets perspective, from a risk perspective? Do you understand the steps that you'd have to go through to assess the element of risk and who the holder is of risk? Do you understand the key components in attribution of risk to a particular person? The element of capacity and the financial muscle to assume the risk. So the capacity to make decisions and the ability to take the risk if it manifests, do you have the capacity to absorb it? That analysis helps you to know where to align the risk. When we look at the transfer pricing methods, the 5 OECD recommended methods, if we look at the sixth method, which is the commodity rule, are you aware of this? When you look at a cap, a cost plus, a resale price, a profit sharing, or a TNMM, are you aware of those methods? Do you know how they apply? Do you know when they would apply? Do you know the best scenario in which they would apply? So there is a whole breadth of detail, and this is becoming ever more important, especially as governments become more and more competitive for tax. So you have more governments saying, no, based off the activities and the value that's coming from my country, my expectation is I should earn a higher reward. So they are choosing alternative methods, and they're challenging methods being utilized by multinationals. As a certified tax advisor, there's an expectation that you should be able to critique, identify, and advise on which the best methods would be. You need to be able to explain the element of tax risk management. Can you explain the risk that comes from transfer mispricing? When we look at the element of intra-group services, as a developing nation, we are in most scenarios in receipt, we receive services. Why? Because centers of excellence haven't yet been built in Uganda, for example. You have countries with higher service, cheaper labor source, more trained workforces, more skilled workforces, highly exposed service providers. It therefore means we're in a state of receipt. What does that mean from a transfer pricing risk perspective? Do you understand the types of services that can come in, the categorizations that are there? Do you understand the shareholder services? Do you understand services that can be directly charged or indirectly charged? Do you understand why the different allocation keys can be questioned, for example. If we look at the element of financing, again, you will note that we are still developing. So there's a lot more FDI coming in, your foreign direct investment coming into the country, rather than us being capital exporters. So that then runs a risk of an interest expense. If it is a related party, what are the rules that kick in? If you look at Section 25 and the changes that came in vis-a-vis Section 89 on thin capitalization, can you elaborate on the difference between the two different rules and speak to the advantages and disadvantages of the two? When you look at Section 25, for example, and you look at how it's being applied to the domestic entities and for domestic transfer pricing, can you critique the impact of such arrangements? There was a recent case on Aponye that was decided. Are you aware of it? Are you aware of the implications? If you look at the element of intangible property, what is intangible property? Tangible property could speak to your marketing intangibles or your trade intangibles. Do you know what those are? Do you know IP holder countries? Do you know the countries that have suitable IP regimes? So for example, if you are a student or a candidate and you are working for URA and you see a transaction with a country which has a favorable IP regime, can you be able to highlight that as a risk, to be able to check and see that the transfer pricing the arm's length price has been applied appropriately in those transactions? So the kind of professionals that are going to say they are CTAs and can ably advise on these transactions should be competent enough to be able to identify the risks, to know the detail, and be able to critique and analyze and give advice. When it comes to business restructuring, it's something we see quite often from a cross-border perspective, from a domestic perspective. What are the implications? There is quite a bit of knowledge in there that kicks in. What happens when you have, for example, brands, a local entity is acquired and there's a requirement for brands to be shifted or they are subsequently sold? If, let's say, the group has centralized IP holding, centralized service management, what is the implication on restructuring? What would be the scenario if you have a loss maker who is part of a group, but is required to produce an item which is naturally a loss leader? Does that mean that you'd be perpetually in a loss? When we look at the element of permanent establishments we've discussed earlier are stroke branches. So meaning the headquarter and the branch are more or less one entity. But for tax purposes, a fictional status is created for a branch in the country of its taxable presence to enable taxation at a branch level. How do you deal with the element of arm's length pricing between a branch and headquarter? If you look at, for example, if we take it to the DTA and we look at Article 7 on business profits, there is a direction which is very similar to Article 9, which talks about your arm's length principle and associated enterprises within a double taxation agreement. So there's a similar requirement for an arm's length determination of income as would have been found between associates in Article 9. So are you aware of that? Can you find a relation between the two? Can you ably explain it? Can you explain the connection between Article 7 and Article 9? So when you're looking at the syllabus, it's quite rich. And in terms of preparation, you need to do a lot of preparation such that you can demonstrate competence, but also be able to analyze. A lot of what we've been discussing to this point speaks to the element of double taxation. Why? Because one, there's a recognition that each country has its own, is a separate jurisdiction. And because it has the powers to make its own laws, to determine its cases and enforce its laws, it means that there is a potential that these laws will conflict when it comes to transactions that are cross-border. The implication thereof is that you need double taxation agreements to come in and settle areas of dispute. And these double taxation agreements, therefore, become important in the context of international taxation. They're a very key aspect of this material that you discuss or that you prepare for CTA 10. Why? It's important for you to know what are the key terms when it comes to a DTA. What are the terms defined under the DTA vis-a-vis the domestic element? This is a precursor to the element of interpretation. How do you interpret a domestic law vis-a-vis international tax agreements? What would be the implications when it comes to definitions, where an item is defined in the DTA, but also defined in domestic law? What happens where an item is not defined in the DTA and there's an expectation for you to then refer to your domestic laws? How do you look at the element of time? Yes. So in terms of preparation, you need to do strong preparation. When we look at the tax treaties, what are the different models of treaties? We've looked at those ones, your OECD, your UN. Right now we have an African Tax Administration Forum model that has been presented that African countries can use. When you look at the negotiation, what are the steps that you would go through as you negotiate a treaty? Are you aware of these? When you look at elements of effective dates and enforcement dates, can you have looking prospective effect? There are things that you need to have in the back of your mind. When we look at double taxation agreements, do you know the different agreements Uganda has? If a scenario is presented to you and various countries are mentioned, can you identify that this country has a DTA with Uganda and the other country doesn't have? We only have about 9 DTAs right now in force. Would that affect how a transaction is interpreted and applied? Definitely. So if you're not aware of Uganda's tax treaties, it means when you meet some scenarios, if you are in the field and you're advising a taxpayer, and the guy tells you, the taxpayer tells you, I have a transaction with a supplier from Italy, the advice you may give might be short because you are not aware of the fact that Uganda has a DTA with Italy, yet you are a certified tax advisor. When we look at the element of investment income, do you understand the different allocation rules? So for example, when you look at the DTA, the first part of a DTA talks about scope. Who are the people who can benefit from a DTA? So you look at the persons that are beneficiary, and in there, Article 1 brings in the element of residence. Then it goes ahead to talk about Article 2. What are the taxes that are looked at within this specific agreement? So when you look at types of agreements across the globe, the common ones that you have are those on income and capital, similar to the ones we have in Uganda, which are majorly. But you can have a DTA specifically on air transport and shipping. You can have a DTA specifically for inheritance tax and such taxes. So it is potentially possible to have an agreement that covers other types of taxes. Do you know the taxes that are not covered within a DTA, for example? You have items of direct and indirect tax. Do you know whether indirect tax is addressed or not? Why indirect tax? When you look at similar provisions that support, for example, on administration, when you look at exchange of information, when you look at administrative assistance in collection, for example, when you look at as an article in the DTA, are these affected by the element of residence? Are they affected by scope? So you need to know the DTA. So part 1 is on scope. Scope also covers your definitions, your residence, your permanent establishments. Then part 2 looks at your allocation rules. So I have different categories of income. how are those incomes from a taxation perspective allocated between the resident and the source state. So it's important to know that there are three potential outcomes that can occur. Option A, the source state can tax fully. So when you look at, for example, business profits, you find the source state, if there's a branch, can tax you 30%, which is the normal tax a normal taxpayer in Uganda would face, full taxation. Option 2, the source state can have limited taxation. So meaning that you have taxation limited if you're using the OECD as a guide to a certain percentage, let's say 15% or 10%, subject to certain criteria being met. If you're using the UN as a guide, there would not be a specific percentage, but still the income would be limited. When you look at after the income allocations, either residence or source, which would cover, for example, from income from immovable property all the way up to other incomes, which are not specifically mentioned in the DTA. After that, you then have within a DTA, the different parts of a DTA, your domestic, your relief, credit, and exemption relief mechanisms offered. Do you know who usually provides relief? Do you know why relief is provided? Do you know the other types of relief mechanisms? Some of these have already been, I see in your exams earlier. So some of these are already known, but can you give further details around them? When you look at, for example, the types of exemption relief that's provided, there are countries that provide exemption with progression. So your tax can increase despite the fact that you're exempt. There are different types of relief that can come through, or modifications. Are you aware of them? When you look at tax credits, how is it applied? If you look at a domestic scenario and a taxpayer has foreign tax credit and they have withholding tax credit and they have provisional tax credit, is there a priority rule in place? What is the implication on the types of credits that apply? So there is a lot of material, but you will find some of that information is coming through from your CTA 8, some of your earlier papers. If you've done CPA, you can bring some of that information in, and it would be rich in giving an explanation. I'll just put a pause there, just in case there's anyone who's lost. Give you a few seconds. We've talked about 7 before when we're looking at residence. And under residence, there's that aspect of domestic law. So what are the rules that are within an income tax act from a residence perspective? How does Article 4 on residence kick in? And those tiebreakers that are there, what are the implications? As part of the syllabus, we also have the East African Community Double Taxation Act. Are you aware of the articles in there? And that awareness can also help you address some of the discussion points that we've had earlier. We then have, but when it comes to models that you can use or DTAs that you can refer to, I would like to repeat here because I know this could be a potential question later. You have alternative double taxation agreements you can refer to. So if it's, for example, the UN, if you refer to a UN model, as long as you can explain what are the key articles within or the key points within the UN model, if you're referring to the OECD, do you understand how the OECD crafts its articles under that? If you're referring to the East African Community Double Taxation Agreement as an agreement not yet in force, do you know the articles in there? How do you relate them to the scenario you're facing? If you're looking at the already enforced agreements, already effective, can you relate them? That's the most important piece. We shall see under pitfalls. If you're going to reference or quote a specific double taxation agreement or a provision, it is important that what you quote, you are aware of, because it is easy for some of those items to be verified. And where they are verified, it then comes out in a negative perspective. So other areas that we need to look at outside the tax treaties, currently in the international sphere and also under your syllabus, the element of harmful tax practice is a key discussion point. This cuts across both developing and developed countries. Why? As countries compete for foreign direct investment, as countries compete for tax, sometimes the competition can become unhealthy. Yeah, you can bring this home to your office, to your school. Competition is good to the extent that it enables you to do better, but at an almost even playing field. If, for example, students in the aim of competing take it to another level of saying we shall steal the exams, we shall do illegal activities to get the upper hand, then it becomes a harmful tax practice. Now, harmful practice for students. So if we come to tax itself, where countries set up policies or legislation that has a negative effect for other countries around them, then we are getting into the element of harmful tax practice. And normally countries that end up with such legislation are called low tax jurisdictions or tax havens. And normally these tax havens are defined. They'll have specific features. So ideally they have the right infrastructure, they have the right personnel, they have the right financial institutions, well enabled. They have regimes or tax laws that result in tax rates that are below par. So what has happened recently over, I think the last could be about 20, because this is 2024, since 1998. So that's about 2026. There's been a lot of action from countries to try and nip this element in the bud. So for example, you see that tax information exchange agreements were introduced to move certain countries from a blacklist to a gray list. Countries that were seen as havens. Why? Because in some havens where if you transact there, the information would be under confidentiality rules and would not be accessible to tax administrations. So some approaches have been brought in to nip this arrangements in the bud. We've seen a number of countries change their approach. For example, Switzerland, for example, Singapore, they've been having provisions which are considered state aid from an international tax perspective or EU law perspective, that a state is artificially helping a specific company or set or sector with an unfair tax advantage. So a number of these unfair tax laws, and the fairness in this case is from a global perspective, are being repealed to ensure that this harmful tax practice is eliminated. So in there you have your anti-tax haven legislation, policies being executed by multinational groups. What domestic law approaches are there to international tax avoidance? So your section, for example, 88, are there any restrictions there? When you look at section 90, are there restrictions you can apply? When you look at, say, for example, section 22 on deductions available, are there restrictions that you can pick up on and apply? Yeah. When you look at section 25, are there restrictions that you can look at and apply? Money laundering legislation and international tax avoidance. If you look at, for example, your common reporting standards that are now in place, what are the requirements? When you look at, for example, FATCA, your Foreign Account Tax Compliance Act, which is a US-based act, what are the implications from a Ugandan perspective? Are there requirements that kick in at that level? So the body is rich. As a candidate, you would be expected, as we said earlier, to have at least an understanding a good understanding of the content under 8, which is an extension of income tax. So if you're struggling under 8, it means even 10 is going to be an extension of a struggle. Why? Because the two are intermarried. There's a lot of international taxes built on income tax. If you're making an adjustment from a transfer pricing perspective, that adjustment will affect your income tax return and your income tax assessment. So the two go hand in hand. That majorly marks the most of our discussion on the syllabus. What we are going to go through next is a discussion on how to prepare. And from a preparation perspective, definitely syllabus coverage is important. The content on preparation is wide. So you'll be looking at, for example, your UN, you're looking at your public international law. So you're looking at your UN tax conventions, you're looking at your OECD guidance, you're looking at the BEPS action points and the requirements that have kicked in 1 to 15. You need to know your private international law. You need to be aware of your tax cases that have come through. You need to be aware of your tax provision changes and why they have changed. Have they changed for the better? Have they changed for the worse? You know, can you critique those changes? Can you find the basis for those changes? That would help your preparation on top of your syllabus coverage. When you look at transfer pricing, can you identify the key items in there and be able to speak to them? We've gone through all that. That's from a preparation and study perspective. When it comes to examinations and responses, I have a few pointers here that are worth sharing. It is advisable that candidates read the questions carefully. Because you're looking at different scenarios and you're looking at fine lines from an international tax perspective, it is important that you read the questions carefully. As you do your response, as you set up your structure for answering, it is always important that you open with an introduction, have your subject matter, and then a conclusion, especially where analysis, evaluation is required of you, synthesis. There's an expectation of a conclusion. Now, in the introduction, it's important that you provide your understanding briefly in the introduction, what the question requires of you. And where possible, where you're given a group structure, it may be useful for your understanding and also your ability to demonstrate your understanding to your examiner or the person who's reviewing your paper, to give them a diagrammatic representation of how you see the transaction occurring, where relevant. Don't look for a diagram where it is not required, but where relevant, a structure would help you. Now, I have engaged with some practitioners, and they will tell you, even in courts of law, some of these areas are very complicated or elaborate in the structuring, that for you to ably demonstrate this to a judge, it is important that you do a simple structure that can easily explain what the question is requiring, what the scenario is, such that a simple person, a simple mind can understand. There is a saying that if you can't explain something to a 6-year-old, you haven't understood it well enough. So if you can't demonstrate your knowledge of the scenario at a simple level, then it's potentially possible that you haven't understood. The advantage with having some form of structure, and especially when you may be noting out your answers, is that it helps you define how you're going to respond. You'll see that in other aspects, especially in pitfalls, you'll find some students, in explaining, they give contradicting answers. Whereas you can find a scenario that says give the advantages and disadvantages, but there could be a person who gives a question asking for one scenario, they give the other side, and then on another page, they change and write as if they had understood it in a different way. And you then leave it to the person reviewing to then give you, decide which answer to mark. That demonstrates that you're not sure of what you're answering. The other aspect that you need to note is question attempts. Some questions are definitely by design harder than the others, majorly because of preparation. You'll find a number of candidates will spot. They'll find areas or topics which they feel are more comfortable to them, or areas they have prepared. And as such, they'll attempt questions which ordinarily might be harder than those which they have left behind. And this speaks to two aspects. One, the aspect of question spotting and preparation, ill preparation, but also analysis in terms of where can I get the best marks and the easiest marks with the least effort. So it's important that you analyze the questions very well. As we talked about the learning outcomes, when you're looking at different aspects or topics, learning outcomes are defined for you. So when you're responding to questions, look at the requirement of the question. If the question says list, the requirement is much lower. If it says describe, the requirement has changed. If it talks about analyze, the requirement has changed. It is important for you to be able to understand what the question is asking and how you need to respond to the question based off the specific phrasing of the question. I can't emphasize this more. The body of information in this particular unit is quite broad, so it's important that you read widely. Do not wait until the last day of or the last 2 weeks for you to then sit down and try and go through all the content. You will not have enough time. Yeah. So prepare early, read widely, understand the concepts. Don't use past papers as a guide to how you prepare. Use the past papers to see how answers have been responded to, but prepare widely. Cite examples where possible. If you know the cases and you can relate the case to the specific scenario, well and good. You're not limited on the cases that you can apply. Cases will be verified. Quote the right sections where applicable. Why? Because the section demonstrates knowledge and understanding and application. And if you quote the right section, it demonstrates competence, at the same time showing that you are relating this to the specific question in mind. So that's useful. However, if you're not comfortable with those sections, it is not advisable in any examination, be it CTA 10 or what, for you to quote the wrong section, because that would then throw you off. Yes, it then you could even quote a section which is not relevant, and then that affects the answer that you're providing. In responding, it's important you have your own internal assessment of quantity versus relevance. So it doesn't add value for you to write 5 pages of material which is not relevant to the question, vis-a-vis a person who concentrates and writes 2 pages of the answers that are required. Now, for all of us who have sat exams, I think we'll attest and state that we are most innovative in the exam. That's the time our brain will come up with all sorts of answers. It is important that when you're writing, start with the most relevant answers, such that by the time you're reaching the end, at least the less relevant or the ones that you're not sure of are the ones coming towards the end. It helps your preparation and helps your structure, helps the person who's evaluating and examining you. Then also from a sense of structure and format, I've spoken about that. There are usually some easy format marks to look at. They've told you to use a report, brief notes. There are some format marks that you can pick up on. Marks on the diagrammatic presentations. Please do not lose some of those easy marks. So we shall close on the last 2 slides. So I'll give you some time If you have any questions, if you don't have any questions, then I'll give you some of your time to go back with. From a pitfalls perspective, it's important as a candidate, as a tax advisor, that you are up to date with the latest cases and guidance. And definitely there's a timing implication from an exam perspective, that ideally a case that's happened, say, between January this year and June would not be in your exam of June. But case scenarios from an earlier period could feature in your questions. Now, does that mean that if you know a relevant case in the same period, you can't use it? No, you can apply it, but you will not be penalized for not knowing it. So from a preparation perspective in the area of tax, it's important to have a good knowledge, understanding of the latest cases and the guidance out. So for example, in the sphere of public international taxation, there is regular, and especially around the current discussion points. For example, if we look at Pillar 1 and Pillar 2 discussion around countries, entities that have digital footprints across the globe, the discussion around movement away from a PE as we know it to a creation of a digital PE, the movement towards a minimum tax threshold that is applicable for entities, the requirement for entities that have subsidiaries in low tax jurisdictions to compensate for those low tax rates with extra tax paid in those jurisdictions to reach the minimum threshold. So there's a lot of guidance that's coming out under the OECD Pillar 1 and Pillar 2. Some of those items haven't yet seeped down into our domestic law, but are you aware of them? So from this discussion today, you need to go back and ensure you're aware of that guidance. There is discussion now around a stronger UN presence when it comes to tax. A lot of that mandate had been put on the OECD. But right now, countries are saying, maybe we should, the UN is actually saying, maybe this mandate should sit with me. So there are conventions that are coming out to address weaknesses in tax. There is a discussion around sharing country by country information without anonymizing the information. Are you aware of that? Can you relate? So when it comes to how you show up, the more prepared you are, the better your preparation will be. When we look at, and again, this pitfall is similar to the earlier point I had around quantity versus relevance. On one part, someone may go for quantity and ignore relevance. But on the other part, someone may look at a question which has 10 marks and they opt to put 2 or 3 answers. And even when they put the 1 or 2 answers, they don't bulk them up with an explanation, a detail, an example. So there's that lack of assessment between the required content and the response provided. Now, what makes limited responses different from the non-exhaustive answers below is that there are certain questions which will not come straightforward, where you have item 1, what is this? Item 2, give the advantage. Item 3, what is the disadvantage? Item 4, give us a conclusion. You might have a question which asks various aspects within one specific statement. And you find candidates that only speak to one component of the question without addressing the broad range of requirements that are coming through that question. That then means that you're going to give a limited response. This could also speak to candidates that out of 3 questions, say in question 3, and it has 4 parts, they only address part 1 and part 2. Now that means even as you get out of the exam, if part 1 and part 2 have 15 out of 25, it means you've already given away 10 marks. So there's a question there as to whether A, you have prepared right, B, you are spotting, 3, that was the best question you could answer. So your preparation would have an implication on that. I've talked about spotting. I've talked about focusing on past papers. I think that is risky. When you look at the sphere of international taxation and you look at the discussion points, I'll give you an example. When you look at, for example, exchange of information, there are different types or categories of exchange of information. There is the broader bracket of exchange information, but you can exchange information automatically. You can exchange information on demand or on request. You can exchange information spontaneously. You can have joint audits. Now, those 4 items or simultaneous audits, 5. You can have 5 items that all fall under the area of exchange of information. In some papers, you'll find they ask you on the broader category of exchange of information. In others, the question is on automatic exchange of information. If you're using past papers to revise, the only item you will read in that question will be exchange of information, and you will miss the element of automatic exchange of information. It would then mean you would give answers that are not relevant to the specific area that is being examined. So you need to really focus when preparing and when answering. I've spoken about the wrong provisions of the law and case law. I'll not speak about that. Time management is also one of those that needs to be looked at from a preparation and planning perspective. If you're preparing, give more time to questions with more marks and apply yourself appropriately, ensuring you can leave space at the end of the exam, end of the question for you to come back if you have time. What that allows you to is in the scenario that at least you've addressed all the questions and you have a little bit more time, you can come back and put your innovative answers. But if you spend a lot more time looking for innovative answers, which are not necessarily relevant, then you will miss the easy marks, which could have been straightforward to the areas that you know. Contradicting answers is something I've talked about earlier. Excess unrequired answers, I think that is something also, it's a repeat, but I've addressed that one. And then non-exhaustive answers as well, that's something I've also talked about, especially in proportion to the marks that are allocated. So from our last 2 pitfalls, I think failure to get format marks is not right. You should at the very least have all format marks available to you. And where possible, make reference to the sources of content that you're applying. Reference could be to the OECD transfer pricing guidelines, for example, could be to the Act, could be to a specific treaty, could be to a specific report that you're referring to, say, for example, report on a harmful tax practice. It can be very many things, yeah? So if you are applying yourself and applying knowledge to a specific scenario, feel free to go ahead and reference, but make sure you reference the right sources. So Godfrey, I know I have spoken quite a bit. I don't know if you're still there, but I would like to park here and then see if there are any questions and answers.
Great. Thank you, Andrew. You deserve a big applause. Thank you so much. I hope your discussion has been very exhaustive. I know you may not be able to finish it all, but I think the basic information has been shared. Like you said, you were welcoming questions in the Q&A, but of course I've not seen many apart from one which I had answered. Someone was asking about November 2023 solutions. Please check on the website. We uploaded the solutions Then the second one, last time I checked for paper 10. No, kindly go there. I'm very certain the solutions are on the website. Maybe rarely, or you take long to check our website. I've not seen other questions, but hopefully people have they have gained a lot. They have had insights into what is expected of them. I'm not seeing other questions. I wish you had typed, you had written your questions here. Would be, Andrew would be able to address them. But, they could be having more questions after here. We shall see, welcome them. Go to you can still send in your comments. We shall find a way of addressing them. Otherwise, I want to thank you very much. I wouldn't want to keep here for so long because I know most of the participants here are busy with their work schedules and they would like to go back to their duty stations to continue with their routine. I want to thank you very much. In particular, I want to thank the presenter, Andrew. Thank you so much. Hopefully, this will be a guide in improving the results, the performance going forward. I want to thank ICPA once again for arranging this. Dear participants, what we are doing is of much help to the candidates, particularly because after hearing, after public outcry, we felt it important to have such sessions, and we shall always have such sessions given your upon request. I think that is all. I want to thank everyone that has spared his or her time listening to us, listening to the presenter, and I think you have been noting down a few things that you are going to use or that you are going to zero on to as you prepare for the May 2024 examinations. I want to thank you once again for sparing your time. Allow me to stop here. And thank you so much.
You're welcome, Godfrey.
We shall benefit immensely from this discussion. Thank you very much. And I have to declare this session closed. Thank you so much.
Thank you. Thank you, Godfrey. Bye.
Thank you so much, Godfrey, for moderating this session. Thank you so much, our presenter. I know here we have CTA candidates, but you can also pass on this reminder to your friends who are doing CPA. Tomorrow, 9 to 10:30, we shall be having CPA 12, Advanced Financial Reporting. And then mid-morning, 11 to 12:30, we shall be having CPA 13, Public Financial Management. Have a good day. Thank you.